Folks, if you don't know, now you know. Mr. Dan Bird goes through the comments on his videos, and when you ask about a stock, he'll probably look it up. Today, we're going to start off this review of just a few stocks with one request for Eli Lilly. Then we'll get into the Mag 7, and then we will call it a week. Mr. Bird, the floor is yours.
All right, thanks. Yeah, I had a request from a subscriber asking me to look at Eli Lilly, and in particular, because Eli Lilly had great earnings, and they've been doing well anyway through most of the year.
Is Eli Lilly the one that has that weight loss drug? Is that guy?
Yes,
Ah,
yes, yeah. Them and Novo Nordisk.
okay.
Novo Nordisk had the first one actually, and then Eli Lilly came out with one. But yeah, that's what's been driving the stock higher. And then they had great earnings last week, so went even higher. So we'll look at that. There's another one called The Honest Company. You ever heard of that?
Yeah, absolutely. That's
Jessica Alba.
Alba. Yeah, Alba's company. Yep.
And somebody asked me about that. We'll look at both of those, and then we'll look at the Magnificent Seven, and I'll talk about some technical analysis on both. So this is my website, breakpointtrading.net. Free newsletter is right in this little box right here. Let me open up stock charts, and we'll look at Lilly first. So here's Eli Lilly, and this is a good one because I'll talk about something similar when we look at the Honest Company. So you can see how much Lilly has been going up, and this is based on that weight loss drug. And then it started selling off right through here. Now, earnings were on the 8th, so that was Thursday after the market. Actually, it was before the market opened, because that's this big black candle right here. All right. So the question was, is it too late to get in? Can we get in here? And was there anything that I could have seen in the charts ahead of time that might have clued me in that I was going to have that kind of rally? And while sometimes there is, on this particular chart, I don't really see anything. Not before the big spike after earnings right there, because you can see it was pretty much going down. Now, I do have a scan that I run that will find stocks that have been selling off and may be ready to rally. So that kind of scan can a lot of times clue you in to something that's about to happen. But in that particular case, it would not have appeared. All right, let's see. Let's scan. Downtrend reversal. Oops, down here. Yeah, it's a downtrend reversal scan. I don't know what's going to show, but so there's 24 stocks in there right now. So JP Morgan's right here. So if we look at JP Morgan, you should see a stock that's been trending down right here. And now it's got a green bar, and it just went above the 21-day moving average. And you can see the momentum indicators are just beginning to turn up. This one's actually crossed already. So, and it's outperforming its peers. So this can give you an early entry by looking at something like that. However, Eli Lilly, if you look at it, it didn't have that. It certainly had the downtrend, but it didn't have the green candle back to the upside.
Gotcha.
Right? It's all red and blue. The first green candle was after the earnings right there. So it did not give you advance warning, but if you were watching Eli Lilly, as this person I think does, I think he's actually in Eli Lilly back here, but he wants to add, it wouldn't have identified it at that point. But what it did do right here is something called a black candle. Now, a black candle, so the way to read candles, so this is a little technical analysis 101. First of all, with candles, think of it as a window shade. So if it's solid, that means the window shade is closed. That means it opened up here and the window shade closed and it closed down here. If it's an open candle, that means the window shade's open. It opened at the bottom and it opened all day and closed at the top. So you want open candles. You don't necessarily want closed candles. Okay. Now, even though this one gapped up and closed much higher than the previous day, notice that it's closed, right? It's a filled in candle. What that means, that's called a black candle. That means it opened higher than the previous day. It sold off most of the day, but still ended higher than the previous day.
Oh, wow.
That's what a black candle is. There's one right here. It's actually one at the top. But whenever a black candle happens, especially on earnings, what that means is all of these people that either wanted to get out or everybody that was shorting right here that wanted to cover their short, they covered it here at the top and it sold off most of the day and closed right there. Now, this is a great clue. Whenever a black candle happens, especially on earnings, if it's a stock that I like, and for that particular person, my recommendation is to put stocks that you like into a watch list and then just look at them every day. After the close, just see what they're doing. What happens with black candles, and we'll see this with the honest company as well, is if they oftentimes will sell off some more or just go a little bit lower because the selling's not done, and people that see this, see that it opened up here and sold down here, start to get scared, and they're like, I'm taking my profits and I'm getting out too. So there'll be a little bit more selling. But if it doesn't close this gap back down to here, or sell off significantly and close at least most of the gap, then that means it's still strong. So this black candle is valid if it doesn't go back down and close the gap. What that means is it's a good clue. You don't want to catch a falling knife through all of this. This is a clue that maybe this is over and time to get back in. So for Eli Lilly, that was the clue. You have to watch the next day though, or the next couple of days. Now, in this case, Eli Lilly gapped up the very next day and just continued higher. So all the selling was done in that black candle. So the next day, that was the clue that it's safe to get back in. And it probably is still safe. It's probably going to go back to the highs up here again. Okay. So that's my comment about Eli Lilly. There wasn't really a clue ahead of time on this, but there was a clue after the earnings with that black candle that I wouldn't get in that day. I would wait and watch it. And then if it proves itself and starts higher, then that would be the time to get back in or add more. So it's still probably valid to add to that. So let's look at the honest company. This is one that somebody asked me about on my Zoom call with subscribers a couple of weeks ago, which, by the way, I'm going to do another one next Saturday. For anyone that's interesting, I'm doing another Zoom call with all subscribers next Saturday. If anybody wants to join, you can sign up for either the annual membership, or if you want to do a 7-day trial just before next weekend, you can do that and join in the call. It's interactive, and people ask me about stocks, and this person asked about the honest company, and at the time it was probably right in here, somewhere in here, and I said it's on a great run, but it needs to break out, and I'm not sure it's going to break out here, so it's not quite time to get in yet. But it pulled all the way back, so hopefully they didn't get in. But then it took off. This is earnings. So you can see earnings was on Thursday after the close. So Friday morning, just like with Lilly, it gapped up and sold off the whole day. So what we have now is another black candle, but we don't have any follow through. We won't get that until Monday. So now you want to watch this again and see if it continues to sell off and goes back down here and either closes the gap or gets back down here to the 21-day moving average. But if it sells off a little bit, even for the next day or two, and then starts to go higher, on the first sign that it's starting to go higher, that would be the time to get in. Because this shows that it's strong. It had great earnings. They had a good report. Gapped up. People were taking profits. So if it continues to go higher, then it's still a good chance to get in. And it's probably go back at least to these highs here. Now, this is only a $4. Actually, it's $3.68. So it's a pretty inexpensive stock. So even if it goes to back to the highs up here at 480, that's what, a 30%, 30% gain in a pretty short time frame. And if you want to hold it for the long term, this one might be a good one to do that with too. So that's my comments on those two. Let's look at the Magnificent Seven. I'm going to use my trend models for this.
Okay.
And what I've done with the trend models basically track the short-term, medium-term, and long-term trend of the indexes, the sectors, Magnificent Seven, and plus a couple of others. Magnificent Seven and Friends, let's call it. So short-term is a 5 moving average crossing the 21. Medium-term is a 21 crossing the 50. Long-term is a 50 crossing the 200, either up or down. And whenever that happens, these arrows change from red to green. And if it happens during that week, so these, the ones in highlight here are for last week. So you can see these two, Palantir got an up arrow, short-term up on Thursday, and Oracle got a medium-term down on Thursday. All right. Now, what I've added to this is a zoom in and zoom out feature for either of these. So if we look at Google, let's say, and the first thing is that you click on the middle one, you'll see the chart for Google, and you'll see where the short-term and medium-term signals were given. A lot of times you can get in on the short-term signal, but short-terms by their nature could go back and forth pretty quickly. So you can see what happened back here, even though you got out there and back in here, and you basically got in pretty much the same price, same level as you got out, but you avoided a big long downtrend if that was going to happen. And then the medium term just confirmed the short term. Okay. So that's what Google looks like. And you can see right now, it doesn't look great. One thing I always look at is this PPO. It's a MACD, basically. Moving average convergence divergence. It's a momentum indicator. Whenever the momentum line, the black line, goes below the 0 line, so I'm highlighting this now in my charts with a pink horizontal line. When it goes below 0, that's confirming a downtrend. So you see it went below 0 right there, which is right about the short-term signal. Went back above 0 right there, which is also right about a little bit after, actually. So it was confirming the up signal. In this case, the down signal came there, and then the crossover happened a couple of days later, so confirming it. So keep that in mind. If I look at the short term or the zoom in for Google, I'm actually putting in where I think the early signal is. So in this case, you can see that the MACD crossed up here. We got a red candle right there that went down just below the 21-day moving average. That's where I would get out in that case. These have not crossed back above, and it hasn't given another signal yet. For the up signal back here, it's the opposite. So this crossed here. I got the green bar above the 21-day, happened right there. And then it crossed above 0 over here, which is basically just confirming. So the above 0 happened here, but the early entry was right there. Okay, so that's how the zoom in works. The zoom out gives you a very long-term view. And if you're patient and willing to wait for one of these signals, and if we get an extended downtrend here coming up soon, like we did in 2022 through all this red portion, then we will get another signal like this. But if you're patient enough to catch one of these, you can see the same thing. MACD went above 0. This long-term MACD went above, crossed over right there, basically the same time. And this is also a momentum signal down here. The green crossed the red right there. And I put all of these right on the chart so you can actually see them. But the actual crossover happened here in early May. If you just looked at these and said, okay, it's coming, looks like it's coming, but it's not green yet. See right there, it's still red. And then got in anywhere in this crossover. You don't have to get in on the first day. This is a long-term chart. It's a weekly chart, in fact. You could get in, a week after it crossed over. You could get in a week before it crossed over, anywhere in this time frame. And you would ride it all the way back up here. All right. So that's what the zoom out does. And I'm going to just go through each one of these with a regular signal. And you can see with Amazon, we got a short term there, and we got a medium term there. Oh, this is interesting. So stock charts just changed their format.
Hmm.
So all my charts are the same, except it took my arrows off. So I've got to go back and put all the arrows back on. But it's basically the pink crossing the blue is short term. So that happened right here. Oh, this is, wait a second. Let me go back to, let me go to Apple. Let me see what happens here. Yeah, that worked. Okay, so there's Apple. Oh, the signals are there. Okay, so that's Apple. Short term right there. So it has not, and notice that this looks very similar to the S&P that I talked about in the last video.
Mm-hmm.
It's coming up right to the 21. It has a green arrow, but it's not above the 21. So if we get another green arrow on Monday and it closes above the 21, that will be a short-term buy signal right there. That'll be on my zoom in chart. But right now, this is still below zero. It's still not giving a good signal yet, but it's preparing to. Here's Meta. Meta's already given the signal. It's already above it. Everything has moved higher. So Meta, it looks really good, actually. Here's Microsoft. Microsoft is down quite a bit. There's been some talk about AI, and in particular that NVIDIA, its 4 major customers are most of its sales.
Yep.
Microsoft, Google, Apple,
Facebook.
and Meta.
Yeah, Meta.
Yeah, Meta. Most of its sales come from those 4 companies. Now, if those 4 companies have pretty much bought what they needed, and now they're trying to monetize AI, they may not necessarily be buying more.
Right.
Not yet, anyway. They may eventually.
Yeah, certainly maybe slowing their capital investment.
Yes,
would be
exactly. So it'll be interesting to see what happens. And we're going to get to NVIDIA here in a second. But you can see Microsoft short-term down right there, medium-term here. So if you had just followed this one, the short-term down, my zoom in chart would have been right here, where I get a red bar below the 21 day. So they're pretty close. If you had just done nothing but followed that short-term signal, you would have been out of Microsoft and you would not be back in yet. It hasn't switched back around yet. So let's go to, there's NVIDIA. So NVIDIA gave the short-term right here, medium-term right here. It's kind of going sideways right now, trying to make a comeback. The you can see it went below the 0
earnings
line.
are what, 2 weeks away?
Earnings are right up here.
Oh yeah, August 28th. Yeah, 2, 3, 2.5 weeks. Yeah, okay.
28th. So short term, if you just follow that, it went below 0 there. That's confirming, and then the medium term was after it went below 0, right? And it has not given a short term up on any of these yet. Nice. So, but it looks like it's trying to. Looks like it's trying to come back up again, but none of these are confirming getting back in yet. There's Tesla, looks very similar. There's the short-term signal, has not given a medium term. When this blue one crosses the red, the medium term will be over here somewhere if it goes down.
Yep.
Came right back up to the, it hasn't come back up to the 50-day yet. And the long-term MACD is still pretty bearish, and it's below 0. I mean, all these for Tesla look pretty bearish. There's Netflix. Netflix looks like it's trying to make a comeback right there. This is just crossed. In fact, it just went above 0 on this one, but not on the signal line right here. That's not above 0. This one here just crossed here. So Netflix is trying to make a comeback, but again, this could be part of that bear trap I talked about. All of these, if what I talked about with the market all come to pass, all of these are going to take off with the market and they're going to go higher. But if the market then reverses, most of them will reverse too. AMD looks really terrible. Got a short-term down, a medium-term down. It will get a long-term down right there if that red line crosses the dashed. That's the 50 and the 200. So, you know, it wouldn't take much for this to also get a long-term down signal. And this is still below 0. So all of these kind of look similar. SMCI, which had terrible earnings, they announced a 10-for-1 stock split. The stock was up 100 points after hours. I talked about this on Wednesday, the aftermarket, my midweek video.
Yep.
Was up 100 points after hours. And once it opened, it was down 100 points, 125 points, 225 point swing it
Oof.
went. And so that's continuing down. And these all look really terrible.
Ugly.
It will take a lot for this one to fix its chart, repair its chart. There's Oracle just got a medium term down, even though it rallied on Friday. But again, hasn't not got above the 21. The MACD is still below 0. This one's trying to make a comeback, but not there yet. So all of these look very similar, except for Meta and Palantir. Palantir and Meta are the two that look the best. The Palantir had earnings and they beat earnings. It had a short-term up signal right there. It would have given the zoomed in signal on this green one here above the 21 day. So 2 days before earnings. And this one here went above 0. So this one looks really good too. So Palantir and Meta, of all of the Magnificent Seven and Friends, are the two that look the best.
Very, very cool, Dan. I appreciate you doing this third video for us today. Again, folks, remember, if you have a stock you want, leave it in the comments. Dan Bird does read them, and we may talk about them next week. You're amazing, man.
Yeah,
Thanks again.
absolutely. And my website, breakpointtrading.net, and the free newsletters right there in the little box.
Folks, go get the newsletter. Thank you, buddy.